Hello, guys, and welcome to another post market analysis of Bank Nifty. Today is November 9th of 2023, and this is the Bank Nifty's price action in a 5-minute time frames. But as usual, let's start from our daily chart. Okay, so yesterday we thought about uh, going towards the downside if we see any close below this red candle. Okay, so this last candle that you're seeing here is today's price action representation of Bank Nifty. This was yesterday's price action. So yesterday we thought that, and if we see any close below the close of this red candle, in that case we can assume that the trend is again in the direction of the downside. But here today we didn't see much confirmation of that happening, and hence we cannot take any proper conclusion when it comes to the when it comes to an end, because these prices are still not out of this area. This is a resistance area that we have drawn based on this price action there, and based on the double top reversal from the top. So that's the double top. So we are still considering the current phase of the market is going in a counter trend phase, where either we can see a breakout above this or a failure of this breakout, and again a trend continuation from there. Because we have this support area, we are assuming that it's going to act as a resistance, and hence we are waiting for the confirmation. But that didn't happen today. Instead, we have seen a little green color candle today for the entire price action. Today is a Nifty expiry, but still we have not seen, even the prices have gone towards 43,800 levels. Prices have failed to close there and sustain those levels, and hence have again market has almost come to previous day closures level, and then it gave us a close somewhere around 43,670 levels. Okay, that's up with the price action of this daily chart. And now let's go back to now. By now we can see that it has also clearly formed a trend line like this. So even waiting for this trend line is also a good idea on a daily chart if you are looking to trade towards the downside. But if you are looking to trade, then you have to definitely wait to see a close above this and also a confirmation above that. Otherwise, we are in a correction mode of the downtrend that we have been seeing in the Bank Nifty from last couple of days. Okay, so now get let's go back to 5 minutes chart and see what we can learn from today's price action in Bank Nifty. Excuse me. Yes. So here we are. Market has just closed a while ago, 7 minutes ago, and we have seen a close of 43,695 level. Okay, we have seen a close around that level, but to start with, market have opened around 43,650 level. Okay, so let's get into the details of this price action. Okay, so initially we have seen, to start with, initially we have seen this is acting as a support, because this swing low that market has created. Okay, because from there prices have sharply reacted and have gone there, and starting at this 9:30 candle, even though this is a piercing candle formation, we are because the market is in very early stages. Our first thing to do in the market, especially if you are dealing with a 5 minutes chart, is to wait for the market to create and give you a swing high and swing low, so that you will get your intraday support and resistance levels. Whereas here till 9:45, you have seen 1 2 3 4 candles, that is for 20 minutes prices couldn't get beyond this area, and it has created a swing high for us. So I would have drawn this area, and also it is also supporting the previous day's swing high from around the second half. Okay, so from there, what prices have done is around 9:50 a.m. in the morning, prices have given us a breakout from this resistance last swing high. So usually by now you would have known that to check any of these swing highs and lows breakout, or support or resistance areas breakout, you will wait for the confirmation candle. Okay, so in this case it has given us a confirmation candle as well. So this is the breakout candle, and this is a confirmation candle after the breakout that you are seeing. Okay, so with this confirmation candle here right now, we know that this is a proper a valid breakout towards the upside. But where should be your target? Simple. You just have to look on the left and see where is the next possible reaction on the chart. So here is the, in this direction going upward, this is the reaction that you have seen from yesterday, that we have got it from yesterday. And the final point that you have to check for is your last but not least, very important consideration is your risk versus reward ratio. So if you see your if that is your reward, this is your risk, because your stop loss should be just below this area. Whereas in this case you are not seeing proper risk versus reward ratio of not even at least one. But prices have gone to the target, but never ever get to into a trade if you don't see a risk versus reward ratio of at least one. And instead what you can do is wait for the opportunity again. See here, it has given us an opportunity after this breakout has happened with the confirmation candle at around 9:55 a.m. But if you see, you have an engulfing pattern right at 10:50. So at 10:50 you have seen a bullish engulfing pattern that is coming at your key support level, that is this your previous area. Resistance area will now become support because prices are coming from the top. And third thing is, now you have to check for your risk versus reward ratio. So in this case it looks like we have a proper risk versus reward ratio, because if you are starting here and where you going forward, where is your first reaction? Your reaction is right there. And where would be your stop loss? Your stop loss would be right below this. So in this case, you see we have a risk versus reward ratio of 1.8. So this is a good trade. We have all our parameters kicked in. That is your uh, price pattern, that is engulfing pattern, and we have an engulfing pattern at an important location, and we have a proper risk versus reward ratio. So when your prices are at your first, so now this is your old target line, which we can take off now. So when your prices are at your target one, then usually every day we say that you should raise your stop loss from cost to cost. So in this case, when prices are here, you know that you should raise your stop loss from the point below this to the point where you have entered. So now you know that you cannot get into a loss no matter what in this trade, because your prices are already have already reached your target level. So after this, if you want to trail your trade, simple logic is, again you have to look on the left and see where is the next reaction. So the next reaction is coming at that level, so that should be your second target. So in this case it has also reached your second target. So this turned out as a very good trade. Okay, so this has given us approximately 81 points in Bank Nifty. Okay, so let me, okay, so this has given us 80 points in the Bank Nifty. Now what should you do? You should simply wait again to see any proper reactions, because from this stage now you know that, see, you have taken this profit. After that the prices are very far away towards your left, you don't have anything above this. So either you continue to trail your stop loss, or it's safe to come back. So in this case it has those who have trailed might have even seen a very good profit from there to almost till this point, but you don't know where to exit, right? When the market is in live, you would have not known how to exit from here, because there is no proper reason for us to exit. You could have trailed at least from candle to candle slow, but you don't have to push so hard yourself in order to make money. You simply have to wait for the proper a reason to get into a trade. So now what we will do is, after this point, after 11:30 p.m., even though prices have gone there, it has seen a very good rejection from there. So what you should have been doing is draw another intraday resistance level there, and you know that the prices have holded here for some time. This is a kind of swing low reaction, so we would have got another. See, no matter how many time you can draw a 100 support and resistance areas, but the thing is you have to continuously updating along with the prices. So here what we have seen is prices have come down. So at this level you have seen here now we have another new support area. Prices have shown us some breakout, but it's not a proper breakout because you there is no follow through candle, and here again there's no proper follow through candle after this green color. And here you have even though you have a proper breakout, your risk versus reward ratio is not so great because your target would be only 20 to 23 points, and your loss would be 35 to 37 points. So that's not a good trade. So it has continuously whipsawed this zone for one two. See, this is one two, okay, and three towards the downside, four, five, six. When prices have pierced any support and resistance area for that many times, that is no longer holding any potential to stop the prices to give prices that support, or it's really not making any sense keeping that area intact. So we just took that off, and we are simply waiting to see prices reaction here. So here you do have see, you can now see at this point, you know that these prices are holding that level. You could have raised it to that level, where because you are seeing a couple of reactions here as well. And now around 2 o'clock you have seen prices coming out of this is a morning star pattern, which is good. But again, your risk versus reward ratio is not playing good. But still, those who you can just simply say that by looking at it. See, this is your risk, below this should be your stop loss, and your target is almost here, right? So but okay, to be on a safer side, let's see how that. See, before doing that, you have to adjust this to exactly this level, because there you have a reaction. Okay, so now what you would have done is simply got this, get this, and see the prices reaction. So if you notice here itself, you are not seeing, after adjusting this support area, this has vanished. Earlier we were thinking that this is a close above when your support area is at this level, but with the moment you have corrected this support area, you see now the entry chance that we were seeing earlier got disappeared, because the candle then gave close beyond this. This is the candle that gave us close beyond this support level, and there's no point measuring the support area there. So here we have a proper breakout only at 3:15 p.m., where we have seen a couple of candles coming out of this support area. But again, you don't have time either at that stage at 3:15 to pick up any trade. So it's always advisable to stay out of the market at 2:50 p.m. So that's it for today. We had, looks like we had only uh, 81 points from the Bank Nifty, which is okay, which is decent enough from the Bank Nifty. Until and unless you are not getting, you see, even if you are getting into a stop loss, even if you see a stop loss is getting hit, which has genuine reasons, even in that case, it's fine. So today is a good day according to me, because we didn't see any stop loss so far. We have seen only a very few stop loss in the last 20 days or so. So this is still good with 81 points. But the main important aspect here is to stay with the market and don't get rushed. Don't rush yourself with the urgency to trade and make money from every move. Okay, so I hope you have understood I hope you have learned something from today's. Okay, so we have a bonus here. See, if you see these reactions, this is a reaction low. Okay, we would have drawn a trend line there, and again after this green point here, we would have adjusted your trend line there. This is also another way of getting into a trade, where you see this is a breakout, and after that you have seen a follow through candle. But in this case, your stop loss would be above this blue line. This is a trend line breakout setup, but again, you have only sideways momentum. So always remember, after a breakout or after a reversal candle setup, it only, in most of the cases, people will misunderstand the concept of a reversal setup, thinking that the trend will reverse. No, in most of the cases, it also means that the genuine meaning of a breakout is that it can change the previous trend. So what so how many trends do we have in the market? We thought only two, up and down. No, we also have a side trend, sideways momentum. So in this case, it has gone towards the sideways momentum. So but anyways, so that's it for today. Let's meet in another post market analysis video, and I hope you have learned something out of today's price action dissection. So please do subscribe for more such valuable post market analysis, and to learn the stock markets in a much meaningful way, in a much better possible meaningful way from the daily charts itself. Thank you so much.